Hey, welcome everyone. Great to have you here for today's crowdfunding session. While everyone's joining over the next couple of minutes, I was just chatting to Matt about, brewery-related crowdfunding. Some really interesting chats going on about that industry. Certainly a niche that has harnessed crowdfunding with some success over the last few years globally as well. Hey, Matt.
Yeah, absolutely. Yeah, so, I mean, some might say, crowdfunding really kind of inspired or created this form of fundraising, that we're going to talk about today with, obviously Brewdog over in Scotland being one of the first early pioneers of raising money from your most passionate customers and fans.
Yeah, absolutely, mate. Absolutely. And good Gold Coast company, brewery just went ahead with you guys again. It seemed like they came and got their whole race done in a matter of days. Is that true? It looked pretty slick.
Less than 24 hours, which was unbelievable. Like anything, you've got plans if it goes the distance, but it didn't even get into the public phase, and I'll explain the difference between private and public as we get into it shortly. So
awesome, mate. Yeah, looking forward to learning more about that. So while people are arriving, and as you arrive, chuck some information about yourself in the chat. It makes things a lot more interactive. Today, as you've seen, we've got Matt from Birchal. We have Melanie and Elise from Ziinkle as well. So Ziinkle is like a dating app. They've had a really successful crowdfunding with Birchal late last year. So we're excited to hear from the Ziinkle team as well. So the big question for today, which is different to a normal webinar, is, are you single? So pop that in the chat. I promise you won't, there's nothing untoward. It's just, a nice, interesting way to open up the discussion. And Ziinkle have got a nice update to their product coming really soon. And so, it's just nice to know who's here. Really looking forward to hearing about the startup journey of those guys, during this call as well. Look, in addition to that, please share what you're doing, what industry you're in, and how many rounds you've done. It does help us to, work out how to, keep the discussion going. And so, Matt, just to give everyone another minute or two to arrive, how'd things go for Birchal in 2021 and the crowdfunding space, mate?
Yeah, 2021 was a really big year, and look, we're still in the midst of COVID, hopefully on the tail end. But after 2020, which was really disruptive, certainly for us in the early days, it was good to kind of resume the growth trajectory that, as nascent industry, we're kind of experiencing over the first few years. So 2021, there was over 80 successful CSF offers completed. Birchal did about 60 of those. Wow!
Congratulations, mate. That's pretty epic.
No, it's been great. It was a really busy year, but during uncertain times, it's really fulfilling being able to achieve great outcomes for companies, raise capital, and people just really kind of going after things and thinking about the future in a positive way. That's probably the thing that's kept me going, is just the positivity in the midst of adversity.
Yeah, it's really a fast-growing space. We've loved partnering with Birchal. Cake and Birchal have been partners now for a few years, Matt, and I think it's works really, really well to help promote this type of funding. Obviously, you do a lot of the hard work. We just come in at the end and help with with the ongoing investor management and administration. But look, it's been a pleasure working with you guys, and looking forward to 2022 as well. So the topic today, as we all know, is equity crowdfunding. We're doing a whole series at Cake. So a couple of weeks ago, we did family offices. Today we have crowdfunding. Coming up soon, we're going to have venture capital and angel investing. So really just trying to help the early stage startup community understand how the different funding opportunities work. Crowdfunding is a relatively recent source of funding. As Matt said, sort of kicked off in some ways by the craft brewing sector and Brewdog in particular in the UK. But, you know, growing very fast and becoming very relevant. You know, we know a lot of startups utilizing crowdfunding. We know crowdfunding works well in conjunction with angel and VC investment now more than ever. You know, so I think it's really going from strength to strength. So I'm really happy to be here and sort of help facilitate this discussion. So yeah, I'm mainly going to be the facilitator. I do have a few ideas about crowdfunding from over the years, but the stars of the show will be Matt and Melanie and Elise. We'll be just, you know, exploring things like what is crowdfunding, you know, the types of startups that might be best served utilizing crowdfunding, what's the process, and then how do you manage all the investors and things like that. So we've already heard a little bit from Matt. He's the co-founder and managing director of Birchal, which is Australia's leading equity crowdfunding platform. Mate, you're a lawyer as well and an entrepreneur. So you've sort of done, you know, quite a bit in this space. And I know you've been a champion when it comes to, you know, regulation around crowdfunding and all that stuff. So I don't think there's much that you don't know. So it's really great to have you here. Yeah, so myself, I'm one of the co-founders of Cake. We have, you know, around 1,000 startups in Australia using Cake to manage their investors and their employee options. And we recently launched in the UK, Singapore, India, and the US, so expanding globally. So yeah, good times here at Cake. Somewhat crazy, but really good. We also have Elise Alexander, who has 13 years of marketing experience in agencies and corporate business. I'm really looking forward to hearing from you, Elise. And Melanie as well has worked in creative agencies and large corporate businesses for over 12 years. So Elise and Melanie are the founders of Ziinkle. I might first flick over and learn a little bit more about you from yourselves as opposed to me doing a big intro. So Melanie, perhaps you could tell us a little bit about the story of Ziinkle and you know, a little bit about your startup journey, and then then we'll try and touch on the crowdfunding as well.
So yeah, the story of Ziinkle really started in early 2019. I came out of a long-term relationship and I didn't really know how to get back into dating or where to go out to meet people. And I really had no choice but to download dating apps because the dating scene had just changed so much while I had been in that long-term relationship. And so as I was using some of these dating apps, it was just becoming really frustrating and really disheartening because it was just really difficult to create a connection with a digital profile and a few lines of bio copy. And I know me personally, I'm so much better in real life. And for me, it was just not knowing, like, how do I meet someone in real life? There weren't any solutions to facilitate that.
So while Mel was doing this, I was her support person and I was living vicariously through her. I'm married. So I'm flicking through her, dating profiles. And the one thing that struck me was, how do you form a connection with a digital photograph? Like, does this person look like photo number 1 or photo number 3? What do they sound like? And I just couldn't get my head around it. So I said to Mel, no, that's it. Get off these silly apps. We're going out. I'm taking you out. We're going out and we're going to meet somebody. When you're married for 10 years, you kind of don't know where the places to be are anymore. So, and obviously not been in a relationship. So we'd spend the week researching to try and find out where people in our age group that Mel would be interested in meeting were. We'd research, we'd book something in and get dressed up and we'd go out and we'd get there and either there'd be no one there, the crowd would be too old or too young. And so we'd sit there disappointed, we'd have our dinner and we would then jump on Instagram stories. So we were trying to find in real time where people in our age group were and what the vibe was at different places. So we would find something, go, all right, let's go here. And off we'd go. And it was lockout laws in Sydney at the time. So we really didn't have much of a window to play around with. And we'd get somewhere and, the same thing would happen. So we did this for months and months and months and grew increasingly frustrated because we knew people are out, we just don't know where. And then we had the thought, wouldn't it be amazing if there was a platform that would allow you to find the people that you wanted to be around in social venues and to tell you what the vibe was at different places? And that was how the idea for Ziinkle was born. And we obviously tested that with about 700 research participants, and overwhelmingly the response was, we need this now.
And so Ziinkle's
sounds awesome. I think even married people need this. Like, it's so, not to get too off topic, but imagine you could just go and find out where the vibe was good. That sounds amazing. Very cool. Very cool. Sorry, I didn't mean to cut you off, Melanie.
No, that's fine. Yeah, I was just going to say, Ziinkle's really just that next gen dating app, and we're just really focused on helping people meet in real life, in real time. And as Elise said, being able to help people and singles decide where to go out is a really key frustration point for the singles market at the moment that we're really passionate about solving.
Awesome. Yeah, looking forward to digging into a little bit more as we go. So, I guess to kick off the nuts and bolts of the discussion, Matt, might throw to you, mate, and if you can, maybe we can chat a little bit about what is equity crowdfunding. How does it differ from other sorts of funding? Let's sort of start with the basics for the crew.
Yeah, for sure. And yeah, thanks again for having us on today. Look, equity crowdfunding is essentially an offer of securities that's made online. It's an offer to retail investors, and historically, doing something like this would cost tens or hundreds of thousands of dollars, and would require a company to have some pretty major additional governance requirements. The equity crowdfunding legislation was passed in 2017, and the first licenses for intermediaries like Birchal were given at the start of 2018. So it's still fairly new in Australia. There are a couple of game changers of the legislation that allow us to do what we do. The first is that proprietary limited companies can now have a potentially unlimited number of shareholders. So previously, a company would be required to convert to a public structure if they got over 50 non-employee shareholders. Now, anyone that acquires their shares through a crowdsourced funding offer is excluded for the purpose of that test. So we have some companies, even like Ziinkle, that have literally hundreds or thousands of investors, which is a key pain point or kind of challenge that the Cake is great at helping companies with. The second game changer is we can advertise these offers broadly. So provided that a short risk warning is included on an advertisement, we can really use any medium. So social media and digital advertising is extremely important to build awareness and promote a crowdsourced funding offer. So in that environment, the businesses that I suppose supremely positioned to do well with crowdfunding are those that have the ability to build an audience or have an audience already. And we describe this as businesses that have a strong consumer proposition. It doesn't mean that it's limited just to B2C. We've talked about craft breweries and the like, but there are lots of businesses that don't have a product or service to an end consumer that we've hosted successful offers for. But the common theme is that they're, trying to solve a problem that is relatable, or they've got a mission that people can identify with. And a few examples, Sea Bin Project is one that we talk about often. It's a bin that sits in the water, collects waste plastic. It's essentially a piece of public infrastructure that no one would buy, but people really care about clean oceans and what that company is doing. So they've done tremendously. But taking a business like Ziinkle, it's a great example. It was, essentially a pre-launch business, notwithstanding that a lot of consumer research had been done. But the challenge was finding people that could relate to the problem or recognize that it was a problem that needed to be solved, and backing the team to solve it. So.
Yeah, great, mate. And I presume you guys have a particular license. I know you do, but perhaps you could talk a little bit about what that license is, not to get too in the weeds, and also like who not to talk to. I suppose when you're raising capital, there is some stuff you really don't want to do. Yeah. And equity crowdfunding, especially when it comes to retail investors, and you might perhaps want to touch on that as well, just to help people understand where you can really go wrong with this sort of thing if you don't work with the right people.
Yeah, for sure. So look, raising capital from the public is a heavily regulated space, and people have raised capital without crowdfunding platforms before from retail investors, and whether companies realize it or not, they are often raising under an exemption to disclosure. So in order to raise capital from the public, you need to produce an offer document unless there is an exemption that you can fall under. So historically, there is a small scale offer exemption. So basically you would be limited to raising no more than $2 million from no more than 20 retail investors. And like I said, whether people realize it or not, if they're raising capital, they're often using that exemption. It's a catch-all to enable companies to raise funds from family and friends.
Yeah, so the great thing about, sorry, go on. Yeah, you're probably going to say the same thing.
Yeah, I was just going to jump into, our license. So Birchal has a financial services license that authorizes us to provide a crowdsourced funding service. So we're an intermediary. And if you want to make an offer, a crowdsourced funding offer, you need to use an intermediary like Birchal to do it, someone that is licensed. Our role is to ensure that companies comply with the Corporations Act when they're making these offers. So you need to produce a regulated disclosure document. The application facility has some rules around it. There's a communication facility, which we can kind of get into in a little while. But by using a licensed crowdsourced funding intermediary, you know that you've got someone that is responsible for ensuring that your offer is run on the right side of the law.
Super important. Thanks, Matt. All right. So, and then we were talking a little bit just before we got started about the growth of, crowdfunding. I think it's great for people to really understand the scale of what's going on now and what a great opportunity is. Maybe try and share some of the stats around the industry, please, mate.
Yeah, for sure. So there's been over 200 successful offers completed since the regime started in 2018. Over half of that has taken place over the last 12 months. So the industry is really growing about 100% year on year, which is fantastic. As I mentioned, Birchal's hosted about 125 of those successful offers. We're seeing many companies come back for follow-on offers. So there's been about 20 second or third follow-on crowdfunding offers, which is great because it is an efficient way for companies to raise capital. There are a range of benefits, of just building awareness that you get through raising through crowdfunding as opposed to other forms of fundraising. And increasingly, we're seeing professional investors invest alongside retail investors in these deals. Historically, people would think that crowdfunding is mutually exclusive to, other types of fundraising or other types of investors. And that's not really the case, certainly not what we've observed in more mature markets overseas, like the UK and the States. And similar things are starting to happen here. We hosted an offer for Thrive around this time last year, and they raised $3 million, and about half of that came from some fairly significant VCs and a family office. And then probably the most notable recent example was Zeroco's $5 million raise. SquarePeg invested $6 million on substantially the same terms as retail investors at the same time. So, a few really pleasing kind of proof points as to, validating the industry and in the eyes of, some professional investors as well.
Yeah, for sure. I've definitely noticed a change, just because obviously Kate's raising capital all the time. We work a lot doing capital raising coaching, and I really have felt a shift in the unity between the different types of investors over the last couple of years. And I think, as a founder looking at crowdfunding, and Matt, correct me if I'm wrong, but I think I sort of got this right where, there's multiple ways to really get yourself into the right zone for crowdfunding. As Matt sort of said, if you've got a good audience already, there's great love with the brand. If you're doing something that's really quite meaningful and people can get around like your mission, but also there's wonderful momentum, I think, Matt, as well. So if you can go onto someone like Birchal and say, hey, like SquarePeg's taking out half my round, you're probably not going to have too many difficulties, getting the crowd behind you, in that sort of situation as well. So I think that's really quite interesting to mention, and just a dynamic that you can think about, when you're putting it together. Cool. So look, let's open it up to Melanie and Elise a little bit more. So look, let's, I suppose, dig into your capital raising journey. So you did your crowdfunding in around October last year. Was that the only round you guys have done? Had you done one before, or what sort of, where are you guys at from that perspective?
So prior to the Birchal raise, we had a number of investor meetings with some high net worth individuals, which they were really interested and wanted to support us in the mission that we're after. However, one of their, requirements was that they wanted us to be in market with users, which, being kind of pre-product, pre-launch, is very challenging when you've only got a prototype to work with.
I remember that.
So we turned to Birchal, and what we really loved about Birchal was not just the capital raising platform, but being a new brand and pre-launch, it was actually a great opportunity for us to do some brand awareness and actually start to build the Ziinkle community right from the ground up. So having people come in and being able to support the mission, and not only that, but being able to potentially use the product down the track as well once it was ready in market.
Yeah, awesome. I love that. I think I've seen that before several times, where the marketing engine of, Birchal actually becomes like a wonderful additional early stage, customer generation point. You can kind of kill two birds with one stone. I think there's really something in that as well. So yeah, thanks. That's a really nice point. And I suppose, was there something along the way where, with your product market fit or your customer journey, where you had a breakthrough or you had some major milestone and you felt like, that gave you the energy or the momentum to open up your round?
I think really kind of one of the key highlights probably was actually the Birchal capital raise, because before that we were, as I said, having some investor conversations, but we weren't really getting, any kind of fruit out of that in terms of capital. So for us, being able to raise the money that we did through Birchal meant that we were able to kind of take our prototype but actually develop the full functioning app and build our MVP, which we're launching in about 4 or 5 weeks. So for us, I think that's the biggest win so far on the journey. Previous to that, it was really just setting up the business, our advisory board, working with our branding and PR partners, as well as our app development company. But I think the funding was probably the biggest challenge that we seemed to come up against. And it wasn't necessarily people didn't believe what we were doing, it's just they wanted us to be in market with users. And so we know now that we've got our MVP launching, that we can now either do another round on Birchal or go back to those high net worth investors. And I guess the proof's in the pudding now.
Yeah, I must say to everyone on the call, I did not plan this for Matt's benefit, and I wasn't expecting Melanie's answer to be so good for Birchal. But look, that's really fantastic to hear, and I think that it really is a testament to the crowd, right? Like, that's what this is all about. The crowd get to see the things they care about happening, and that's just such a wonderful thing to see in the early stage sort of innovation and venture space. So yeah, really wonderful proof point on that. And so the funding, I presume it was late last year. We've had Christmas and everything, although Christmas might be a really good time for you guys. And you've got, I think, a product launch coming up. Do you want to tell us a little bit about what that funding has enabled for you, since then and around now?
Yeah, so since we got the funding, we were able to start our development. So we've paid for the MVP, which is great. And it's, as Mel mentioned, we are not far off from launching that. It's also helped with the operational costs, because there were a couple of costs coming up that we needed to sort out, as well as marketing. So Mel has been looking after the marketing. I look after finance and ops. So that has now that we are close to launching, that's starting to ramp up, and we're able to start generating brand awareness and let people know that it is coming. We have managed to get people on our wait list who have paid us to use the app before we've even got a product. So we're really proud of ourselves for that one. And we have a big wait list. So we're very, very excited to launch soon.
Yeah, that sounds awesome. I'm going to hit up all my local single friends, and then I can go hang out like in cool places because they can do the research for you guys. Cool. All right. So, oh, by the way, all the singles on here, make sure you go to the website, get on the mailing list, like find out what's happening, and get on and support Ziinkle with their launch. I think that'd be awesome. Cool. So, Matt, look, back to you. We touched on the type of investors that participate, but I think we can perhaps, just expand on that a little bit. Do you mind talking to, the crew today about, what the investors, like who they are, like some of the major attributes and the different types of investors. And then I suppose a little bit about, their mindset, perhaps what they're looking for and why they go onto the crowdfunding platform as well.
Yeah, for sure. Happy to. And I mean, it might be a somewhat frustrating answer, but, a typical lawyer's answer, but it depends. Like the concept, it does always depend. It depends on the company. And it's quite deliberate because, historically, the way that early stage capital was done, particularly in Australia, corporate advisor or another, group would cultivate a list of investors and then charge companies for access to that list. And that's not really how it needs to be done anymore. And it's certainly not how Birchal does it. Like we've got a big audience, which we've been able to build through, doing the offers that we've had. But every company gets access to our audience through, our newsletter and our paid advertising activities. But where we feel we can make the most impact, working with a company to think pretty critically about the audience that is most relevant for them. And that's really our brief, right? Is to build, the right audience for each company. And because of that, the investors that are interested in, one offer might not be interested necessarily in another offer. So that's why I'd say, it depends. But, in general, retail investors are limited to investing $10,000 per company per year. A lot of wholesale investors are active on the platform.
And what's a retail investor, Matt? For just anyone, real quick. Pretty much everyone that isn't like super rich and has a form that says they're not retail.
Yeah, that's right. Everyone's retail unless they're not.
Unless they have a form, and if you haven't got a form, then you're not. Like pretty much everyone's retail, right?
Yeah, I mean, look, there is a debate going on at the moment. So the way that we determine that someone is not retail and therefore a wholesale client is with an accountant certificate. And there's some debate going on at the moment as to whether or not the thresholds for being a wholesale investor need to be revisited. But essentially, if someone can give us an accountant certificate saying that they've got more than 2.5 million net assets or greater than 250,000 in income, then those retail restrictions won't apply to them. What we're seeing though is there's actually a lot of people that identify themselves as wholesale, but they'll actually invest less than the $10,000. So we don't need to determine their status as a wholesale client. And I think what is happening is because there are more and more of these opportunities available, readily available to people, we're seeing more and more investors just take a portfolio approach and perhaps invest, smaller amounts than they otherwise would if it was a private offer. And that's probably one of the advantages for investors with crowdfunding is that historically, if you're going to participate in an angel round, your minimum ticket size could be 20, 50, sometimes higher. But with crowdfunding, it's far cheaper to take a portfolio approach and essentially make smaller investments on a large number of companies.
Yeah, I couldn't agree more. Not financial advice, but seeing this right across the board, we've started doing angel investing, with a separate group, and I did the Airtree Explorer program last year, and I've been studying, early stage investing, and it seems to be somewhere around the 40 investment mark is the right number of diversification to get a unicorn, right? So if mathematically that's the case, even very wealthy people with $1 million to put into very high risk ventures, they're still going to have 20, 25 grand per investment. But, it gets small very quickly. So I think it's just worthwhile everybody knowing that is happening more and more and more. Angel investors are investing smaller and smaller tickets per company to get a bigger spread. So, I think that really does work in the crowdfunding. space as well. And look, while there certainly are, is a place in the market for corporate advisors, it's not an overly efficient way of doing things, because there's huge people bottlenecks on it. Whereas a platform like Birchal's, while it has great people helping you through the process, there's a lot of technology and scalability involved to help you as well. So awesome. Thanks for sharing that, mate. All right. So what have I got here? So let's go into the process a little bit. I'm sure people are keen to learn, what's the process, and we have had, at least 6 or 7 questions. So while I might get you, Matt, to maybe talk a little bit about the process. Actually, I'll give you a break for a sec. Which one of the Ziinkle crew want to talk a little bit about the actual crowdfunding process? Obviously, the marketing aspect of it was wonderful. Anything else you want to share about, like lessons or tips for the people about how they can, get their crowdfunding going well?
I think one of the most useful things I found going through the Birchal campaign was probably the how-to guides and the templates that you get. So particularly the planner, which basically says before your EOI, everything you need to do, when the EOI is live, what things you need to tick off, and then when your campaign actually goes live. And I think having a marketing background for me, like it was from a campaign perspective, but I know for other people that don't have marketing backgrounds, like those types of tools are super valuable just to help you understand, I guess, and break it down into kind of what you need to do first and following through the different stages of the raises.
Yeah, that's great. Certainly from our perspective as well, we've seen them like honing that process over the last few years. So I'm sure it's getting pretty slick for now. And Matt, like from your perspective, do you want to give like a high-ish level sort of run through of the process, please, mate? And then I'm going to see if I can get through as many of these questions before we sort of move on.
Yeah. Look, absolutely. So as Mel mentioned, we run like an EOI campaign. So it's a pre-offer marketing campaign. Just stepping back, our process really end to end is about 9 to 12 weeks. So the first step really is for a company to, complete an eligibility form, chat with a campaign manager, and then create their company profile and their campaign video. A campaign video is really critical for a successful crowdfunding campaign. It's an opportunity for you to, kind of show basically the team behind the business. Like people do invest in people, that's what we find. So, creating a really good, engaging video that describes who you are, what you're going after is a really effective way to draw people in to what you're trying to achieve. And then we have 2 campaigns in the process. So an expression of interest campaign and then the offer itself. Now, during the EOI stage, there's only high-level information about the company and the campaign video and marketing activity, digital advertising activity to build a broad audience of interested investors. When you think about what we're trying to achieve in this short period, basically, we're trying to move someone from a position of not knowing about your business to actually giving you money and investing in a few short weeks. So, the EOI campaign is pretty critical because it helps us to start conversations. It's, describe it as a slow reveal. Like you don't want to give them all of the information that you've got up front because, human nature, they'll find any number of things to disqualify themselves from the opportunity. So you just want your foot in the door to start conversations with these people on the way through. We ask some high-level information, what kind of investor they are. Obviously, we have their contact details, but importantly, how much they'd be willing to invest. Now, this is really critical for us because we can give guidance to companies on how much demand is out there for their offer, which helps to structure your offer in terms of your minimum and maximum targets. But while the EOI is running, companies are usually checking in with a lot of these investors that have expressed interest. Based on their engagement and how much they've expressed interest at, you can kind of tailor how you engage with them. And while that's all happening, companies are usually working on the finer points of their offer document. We encourage companies to choose a selection of these EOIs that they've had conversations with to really finalize the offer document and just make sure that, that there is some support for it, because once we open the offer, we can't change anything about it. And then we move to the offer phase. The offer phase broken up between a private period and a public period. The private period is just to get that early traction, hopefully within sight or over the minimum target, ideally within 24 or 48 hours. So we're only marketing to EOIs at that point. And then after that, we turn the ads back on and power through, hopefully to the maximum target, and away you go. I'm keen for Mel and Elise maybe to share some insight on how their engagement with some of these EOIs pre their offer went.
Yeah. So we, as Matt said, through the EOI phase, as we were starting to get interest from particular investors and questions, we actually set up a series of MailChimp emails that we sent out to people to engage, to keep them updated on the progress, as well as any other activity that we were doing. Because during our EOI and also our offer phase, we had a bit of PR going on with AusBiz TV and Ticker News and a few published pieces as well through some finance publications. So we wanted to make sure that that group of EOIs were really excited and engaged, and we found that that email communication was really valuable. And then for some of the EOIs who expressed larger amounts, we had more direct one-on-one conversations with them. So we had sent out meeting invites, and we got to do Zoom meetings and some Google Meets as well, just to meet, and have a conversation, answer any questions, and just get to know each other better.
Sounds like a great process. Yeah, building these relationships is critical. So yeah, awesome to hear. All right, we do have quite a lot of questions, which is awesome. This is exactly what we want. We're here to help, and we've got, a real expert, and the crew from Ziinkle have just done it. So I think now these are the perfect people to hit up. So let's do it. All right. So quick one, I think for you, Matt. Can crowdsource funding offer safe notes in Australia?
No, not yet. So the only security that can be offered is a fully paid ordinary share. There is some scope for the types of securities to be expanded, and we don't need legislation. It can be done by regulation. There's been some discussion recently about expanding this. ASIC has got a consultation paper out at the moment, and they're kind of intimating as such. But yes, just fully paid ordinary shares, no safe notes yet.
Awesome, mate. Nice and clear. So this is from Dean Robertson. Thanks, Dean. Good to see you, mate. Does Birchal handle ongoing investor relations, or do we need to load them all into Cake and do it ourselves? Also, can investors sell their holdings to other investors, and how do we capture the share transfers? So Matt, I might get you to answer that first, and then I can maybe follow up.
Yeah, so look, Birchal has some functionality for companies to update not only their investors, but the audiences that companies often forget about are the uninvested EOIs. So people that didn't invest this time but expressed interest, they might invest next time if you come back. So, we encourage companies not to forget these people. Just because you didn't get them the first time, you might get them the second time. And then, people can just gather followers on the Birchal platform, when they're not doing an EOI or a crowdsource funding offer campaign. So we do have some functionality for companies to publish updates, and every Birchal user gets a weekly digest. So companies that have published an update can do that. In terms of selling shares to another shareholder, this is something that will really be determined by the constitution of the company that you've invested in. We've kind of working on some services to make this process a little bit easier for companies and for shareholders. But ultimately, it'll be the constitution of the company that will dictate what the circumstances are where you can transfer your shares to another shareholder or a third party. And if you're registered with Cake, or if the company is using Cake as their registry, I imagine that's something absolutely that you guys can help with.
Yeah, before I also just add a little bit to that, Matt, is there a 12-month period where the crowdsource funding shares can't be transferred? Do I remember that as being true, or is that untrue? Or
it is technically true, but
okay.
It's
not really a thing. So it's more about the constitution. So whatever your constitution says goes. Okay.
I think the issue with that rule about no on sale within 12 months is basically if someone was going to advertise broadly to people to sell their securities, but what you'd find is if it was a single person transferring their shares to another single person, then the small scale offering exemption would usually apply, and you should be fine. So
awesome. Yeah, so just to follow up on what Matt said, huge supporter of investor relations work. Like, it's one of the most important skills that a founder needs, and something that we all struggle with our many hats we need to wear. And so I would highly advocate keeping all your Birchal, investors and EOIs up to date as often as possible. Quite often, when a startup does their round and then manages their cap table and their ESOP on Cake, they'll have crowdsourced funding shareholders plus some angels or perhaps a VC or something like that. And so you could be doing your announcement on Birchal and your announcement out of Cake. It's better to do it twice than not at all, absolutely. And then you've got all your investors covered, and you're keeping them up to date. So you can definitely do that. And then, so Cake has a share transfer feature built in. So the share transfer form is included. So you enter the buyer and the seller information into Cake, and the share transfer form pops up, and it'll go out for signing. And then the transfer all happens in the cap table. So Cake can handle that for you when you need it. All right, Natalie Tormey, I love Birchal, yay. There's something, Matt, here about one director, and I'm cautious to bring another director on for the sake of it. Is that a thing? I don't know. May I ask why it is one director and what you may suggest in this circumstance? Does that make sense?
Yeah, it does. It's absolutely a thing. So as a proprietary limited company, if you want to make a crowdsourced funding offer, you will need at least 2 directors. There are some other things that will apply to you once you have CSF shareholders, but that's one of the eligibility requirements. And look, the thinking behind it is just that, a crowdsourced funded company, it's almost like a third class of company. It's, proprietary limited companies, a CSF company, and then a public company. So there have been some adjustments to the governance arrangements for this regime just to, improve accountability and transparency. And that is one of the eligibility requirements. So have to find someone that you're comfortable to invite onto your board.
No, it makes sense. It is what it is. So get yourself a second director. It normally is a good thing to have help at that level. So I think it's probably good, although it can be a bit challenging in some circumstances. So I'm sorry if that's hard for you, but hopefully you can work it out. So there's a question here about what the company actually gives back, Matt. So it's shares in the company, right? So they become a shareholder, they get a share certificate. When they look at the share registry or the cap table on Cake or in spreadsheet or whatever it is, they can see how many shares they own. They can see what percentage of the company it is. In some circumstances, if they go to ASIC, they can see themselves there in ASIC. That's not always the case because of the number of shareholders. You may not get on the register, but you're selling shares. So that's basically the answer for that one. Graham Constable, what are some of the typical ROI requirements from investors, and are these different between retail and professional investors? Anyone want to take that?
Perhaps, look, this will vary from investor to investor and, company to company. I've got an answer that I usually give to companies when they're asking about this, and that is just early stage startups. Most investors that are active in this space, they'll want to take a portfolio approach and invest in, a large group of companies. That means that the ones that do well need to pay for the ones that don't do so well. So they're looking for, higher growth potential for these opportunities. So a credible pathway to a 10x return. It doesn't mean that it's got to happen, but it's got to be a possibility. And that's something that an investor can infer from, how you've sized the market, how credible your plans are to execute on the opportunity. And that's really the kind of mental exercise that I imagine and that I understand and observe that most investors go through.
I always say, Matt, there's sort of 2 horizons. So the first horizon is investors kind of want to see, they're doubling their money every year for the first couple of years at least, and then it gets a little bit lower. So you're looking for 100% return for the first couple of years, then maybe 50 to 70% return in those next few years because you've de-risked things quite a bit. So you've got to be able to show them that first year, like I'm going to get to here and I think my company is going to double. And then you got to show them the long term, I think it's become more like 20x now. I can 20x over here, and I can, and I can also see a path to, really great growth in the next 12 months. I like to think about it like that when I'm coaching. And I think, it's somewhat less critical in crowdfunding, Matt, correct me if I'm wrong, that it might be, say, in venture to have this dynamic because of the, there's a lot of different motivations for investing in crowdfunding. There can be a real need and a real want to see things exist. And of course, you shouldn't, well, people can do what they like, but, investing is a financial thing. So there really should be that financial element to it, but it can be, slightly different dynamic with crowdfunding.
Before we move on, I'd just add that, being a regulated offer for retail investors, there are some limitations or requirements on your ability to talk about future matters. So unregulated offers, so with an IM, usually shopped around to like VCs and sophisticated investors, people will want, 5-year forecasts and really kind of detailed information about what the company expects to happen in the future. A lot of that stuff cannot find its way into a retail offer document because it requires a reasonable basis, and ASIC has certain expectations on what constitutes a reasonable basis for a future matter. So companies don't usually include forecasts or prospective financial information, or if they do, there's certain things that need to be included. We encourage companies to talk about, historical performance, but then also talking about their business model and sizing the market appropriately, because often you can kind of create the same impression or invite an investor to infer something by being factual, by talking about other elements of your offer.
Nice. Thanks. Hey, ladies, there's something in the chat. Have you seen it? There's a chap there that wants to connect with you guys. So I think that's cool. We're able to connect people during the chat as well. So hit Miles up to see if there's a collab opportunity. And we have a question from Matt Moore as well. So, what would you do differently if you were going to do it again? And I guess, would you consider doing it again? I'm sure you would.
Definitely on the radar.
Yeah. Would anything you do differently, or that you might change next time?
I think now that we've been through it once, I think there's definitely optimizations we would make, probably more on the marketing side of things and working with our media agencies and the paid ads. But ultimately, there's nothing I would have kind of changed about it. I think it's more just a learning process, really.
Cool. And Matt, back to you, a couple of quick ones. Is there an average investment amount per investor?
It's about $1,500.
Yep.
Last time I checked.
And is there an average amount that founders sort of the round size, from a dilution perspective? I think, when it comes to sort of angel investing, you're sort of normally in that 10 to 20% per round, depending on, I guess, those big factors like the valuation, the amount of money you need, those sorts of things. What about with crowdfunding? Is there some norms there?
Yeah, look, it's a similar range. I think looking at the minimum and maximum sizes for offers that we publish, it's between that 2 and 20% at the upper end. And we're releasing a report next week. I don't kind of have all of the data in my head, but there is a strong correlation with reported revenue and the median amount that companies raise. And it's fairly intuitive and obvious, but it's nice to kind of confirm this with data that basically, pre-revenue companies generally raise a certain amount of money. What we describe as growth stage companies with greater than $1 million generally raise over $1 million for their round.
Awesome. Look, I guess, a little bit of a trickier question. There's one here about some of the, I guess, pitfalls or challenges of crowdfunding. Where does it get more difficult? What sorts of things could you highlight to people, that they can maybe keep an eye out for or be aware of?
Look, it's a regulated offer of securities. So, I think that needs to be treated with the respect that it deserves, that there is liability for, you know, the directors and senior managers in preparing an offer document. So, but, you know, we make companies aware of this, and the process is kind of designed to ensure that people operate within the guardrails. The other thing that I'd say is, you know, companies sometimes come to us and probably aren't ready for the transparency and accountability that comes with making a crowdfunding offer. And I think if you are concerned about that, then you probably need to think whether this is the right source of funding for you. It's not, you know, you are essentially a public-facing company, or more so than you have been in the past, and that means that you've got to prepare annual reports, and information about your company is going to be out there. It can be confronting, you know, particularly if you haven't done anything like this before. But there are huge advantages available to companies that really lean into this, and this is what we've seen, you know, with Ziinkle and Black Ops and, you know, others that really kind of nurture the group of investors that they've brought on. They really achieve, you know, significant benefits through fundraising in this way, but it's not for everyone.
And that's something we found with Ziinkle when we were considering the equity crowdfunding phase. We were nervous because we had to put our idea completely out there. And before that, we had been making everybody sign NDAs and didn't want to talk to too many people about it. So for us to put everything out there in public and run the risk of, oh, someone's going to steal our idea, you know, we got our heads around it, and obviously it was fine. The other watch out from our perspective was later when we do future rounds, if we come across, you know, high network investors or VCs, they're going to look at our cap table and go, oh, you've got quite a lot of people, you know, even though I didn't want to fund you when I should have, you know, how are you going to clean up this table? So we actually put a buyback clause in our constitution for RAs, which works for us knowing where we want to be in a few years. So that's something else people can consider.
Does that have like a set price or something in it, or so basically you can buy out the earlier stage investors or something like that?
Yeah, we can when we're ready, we can buy out at a certain price. Yeah.
Interesting. That's good to know. I'm sure that's quite interesting info for people. Appreciate that. What else have we got? So yeah, well, I guess we're getting quite close to the end of the time. I think this has been unbelievable info for the crew on the call. Look, Melanie or Elise, was there anything that we haven't covered that you were keen to share?
Or just our experience on Cake, because, you know, having, you know, come from, you know, corporate backgrounds, we haven't had to do a startup and manage our investors. So I jumped on to Cake, played around with it. I found it pretty intuitive. I actually found it too intuitive just because I'm so used to complex corporate systems that have been built really badly. So I actually overcomplicated things for myself. But, you know, with the help of Shannon and the Cake team, there's like an onboarding session. They help you learn how to do each part of it. We now manage our investors and we manage our ESOP off it as well. So it's just been great for us, and just a big load off our shoulders.
Yeah. Thanks a lot for highlighting that. I almost forgot to bring that up. So thanks for that. Yeah, we do actually work with quite a lot of Birchal's customers. There's a really good match. From my perspective, we did work really hard to build a product that can handle, the requirements of these crowdfunded companies. I remember at least twice Birchal broke our system. I think the first time was about 400 or 500 investors, and then like a few months later there was one with about 1,800, and the engineering team over here were just pulling their hair out. But our system can now handle thousands of investors and flick out 1,000 share certificates in a matter of seconds now, I think. And there's a component right at the end of the process, Matt, where that you've been through the process, you've got all your documents signed, all the money's sitting with Birchal, but before the money can go, to the company, there's this compliance piece, where Cake and Birchal work really, really well together. And I think it's because our system is, so streamlined and we can handle all the scale, we're able to get that money banked. I think, you tell me, but I think we've done pretty well at getting that process about as quick as it could possibly be, which is always nice for the founders, because quite often by the time the money's coming, they're pretty keen to get it in their bank account.
Yeah, absolutely. Yeah, working with the Cake team has been really good. In Shannon and Ellen, spent a lot of time. I think I was almost in touch with them daily in the last couple of months of last year because we were settling so many offers. But yeah, as you say, the offer's over, but then there's the important stuff is getting the money to the company and making sure shares are issued properly. And we take a batch approach, so we'll kind of settle in batches. We're usually in a position to settle the majority of the round within the first 7 to 10 days of an offer closing, and then we try to get it wrapped up in 3 batches, so 2 following batches after that. But yeah, the process is certainly much more streamlined now. So hopefully you thought so too, Mel and Elise. So.
Yeah, definitely. I think we got majority, almost 95% of our investors batched in the first 3 days. So it was quite efficient, which was, for us, needing that capital was really important.
We're really excited about that as well. And so perhaps, Matt, we can wrap up with a bit of a look towards the future. I think this is a space that is only going to grow, based on the trends from recent years. And we also have, the opportunity for secondary markets. I think the more time passes after these rounds and the more successful the companies become, the more opportunity there is, for secondaries. And I think it's an area that you and I have had a few chats about, and it's quite an exciting area. We've seen some leadership internationally where there is an opportunity for, the early supporters to be able to, get some exits. And yeah, any comments on that, Matt? Do you see that sort of coming through in the next couple of years?
Yeah, look, absolutely. We've built a service to, that companies can use to, help their shareholders, sell stock on a periodic basis.
That's right. Yeah. Tell us a bit about that, mate. So
there's an instrument called the Low Volume Markets Instrument. Basically allows a market operator to basically operate a financial market without a markets license, provided that you don't transact more than 1.5 mil and no more than 100 transactions within a 12-month period. So we envisage this as a service that Birchal would provide to a company that chooses to provide it to their shareholders. No one likes being the first, so we've got a few companies that are thinking about using this, but it does require the conditions to be right. It requires a company not to be raising capital themselves and to, I suppose, have demand for their stock, to have interested investors to acquiring shares. So we're hopeful that we'll have piloted that this year. But as with anything, it's, a heavily regulated area. I think that's the opportunity for businesses like ours to simplify things and make them accessible as possible for companies and investors.
Yeah, awesome. Can't wait to help with that space and helping to provide liquidity for, for all these great early stage community members. All right, so we're pretty much bang on time, and I always love to sort of finish and let everybody get to their next thing. So look, huge thanks to Matt and Birchal for today, and for their great work in this space, helping to back great companies. Really wonderful to meet the Ziinkle crew today. Thanks so much for sharing your journey. Make sure all the singles on the call get onto their website. Look out for their release. Tell your friends. There's a question about how to contact Birchal. Matt, just hit you guys up via your website or.
There's, if you go to the Raise Investment page, there's some information on how to take the first step, and a campaign manager will be in touch.
And we'll be sending an email out to everyone, so it'll be the recording and information about Cake and Birchal and Ziinkle, so you can easily access that in the coming days. So thanks for joining us. Really hope you learned a lot and it helps you on your journey. And yeah, thanks again for the guys for helping us out today.
Thank you.
Thank you.
Have a good one. Bye.